Four out of seven cases in Karnataka, I believe, High Court,
Yeah.
are family dispute over money,
Wow.
property, gold. Roger Federer said this. He
Yeah.
said, I haven't retired. I have just graduated. And like all of you, I
Yeah.
am also looking at what to do in this next part of my life. Why do families for marriages sell assets at a discount, sell real estate at a discount? When they get old and they retire, they sell at a discount. When health goes bad, all of this can be avoided. How many athletes or families do you know who are fighting in court over property, money? Huge.
Real estate in Dubai or Goa?
Dubai. Goa market is very dicey. If I want to retire with 2 lakhs a month, my requirement will double every 10 years.
Hello and welcome to Money Moves. It's a show where we cover all the ways you can make the right moves with money. And this is by Lemonn. We have a great guest today with us. His name is Deeraj Shetty. He works with a lot of interesting people. Cricketer Robin Uthappa, the COO of TCS, one of the largest conglomerates out of India, Mr. NGS. He works with Ryan Fernando. You must have seen him on social media, one of the biggest dietitians and nutritionists in the country right now. Has a practice spanning, Dubai, Europe, and a bunch of other places. Of course, Bangalore is home for him. So welcome to the show, Deeraj.
Thank you so much. Absolute pleasure being here. Excited and a little nervous as well for today.
I'm glad it's a combination. Deeraj, tell us about your journey. How did you become the personal CFO to a lot of these people? Not easy to work with, some of them, right?
Nothing in life is easy.
Yeah.
But if I look at my journey from the time I was a child, it starts with my parents. My dad was an investment banker, one firm, 32 years. My mom always knew how to budget money because she always had more money than my father.
Yeah.
Right? So that's where it started. I left home at the age of 15 to play international tennis, or at least try.
Wow.
Moved to the US from the Middle East. At that point, I needed to learn how to manage a little bit of money. And if you ask any family who moved from India to the Middle East in the late 70s, early 80s, they didn't move out of choice. They moved out of desperation, right? So when you have that growing up, you learn to save and you find ways to manage it better. So that was my intro to money growing up. And as the journey grew, I tried playing tennis. It didn't work out. I joined technology, but I was always interested in money. And sooner or later, 10 years ago, this I moved to India, set up a financial planning and a wealth management firm, trying to do it the honest way. And that's how I kind of came into this.
Dheeraj, you were in corporate, traditional job.
Absolutely.
After college.
Yes.
Correct. And then what sort of prompted you to quit and start on your own? Because you also mentioned money always interested me. I'm assuming not in the greedy sense of money,
Never,
but yeah.
never.
So,
So growing up at home, money was always looked at not with fear. It was always an ally. What I mean by that is, even though we didn't have much, our parents never made us feel we lacked anything. So that was always the mindset. Now, when I graduated from college in the US in 2005, there were only so many H1 visas. I joined a tech firm, and I'll be grateful to them for the rest of my life. They got me introduced to back-end technology in wealth management. And that was a very interesting transition for me. I had only seen the front end from dad earlier. Now I'm seeing a back end. So that was the first kind of bulb. The second bulb is my parents were in the Middle East and they were looking to move back to India. And US had a lot, but I felt, can I be in India when they're there? And if so, what would I do? Right? Because my parents have spent money on education in the US. Yeah. So it was from that perspective. But at some point, when I started speaking to dad, when I started speaking to their friends who had spent 25, 35 years away from home, right? What was the intent? Why did they leave their family? To make a little bit of money, to provide to families back home, and probably take care of siblings. After doing all of this for 25 to 35 years, they had no peace, no calm, no strategy in place, nothing, and money was all over the place, right? So that trigger is basically everything kind of coming together. And that's when I said, I'm good with the corporate world and started making my way from the US. I moved to Bahrain. From Bahrain, I moved to Dubai. From Dubai, I moved to Singapore. And from Singapore, I moved to Bangalore. I wanted to understand how Indians invest globally.
Got it.
Yeah.
Got it. Got
So
it.
that was my 3-year transition from the US to India. Because moving from the US to India, otherwise, to me, I believe would have been a very big shock for me.
Yeah.
So
Yeah.
that was how I came back
Yeah.
here.
Yeah. It's interesting how, you know, some people, if you've been earning little but can still be peaceful, you know, if the money's been managed well, but at the same time you could have like a lot of money coming in and not, you know, be happy or, you know, have things under control, right?
Very true. I believe all of us are products of nature, nurture, exposure, right? I've been very fortunate in all three of these. Now, what you mentioned is where we are born, what our parents have, what they expose us to. Then it's our friends, families, neighbors. And after that, we come to work, experience, college, everything, right? The three things I learned here. One was, and if you look at it from a sports perspective, nothing in sports comes soon. So you've got to put in the time. When you put in that time, you have to be patient because no tennis player is going to see results in a year or 2 years, right? It's the same thought process here. And the most important thing that I learned is the expectations you set for yourself. What you set for yourself is based on the information you have, how you process it, and what your vision is. Right? So I felt I was fortunate enough to have three of these through parents, through my sister, through friends and family.
Got it.
And that's where I got lucky in starting everything early.
So in when I speak to wealth managers and, you know, financial planners, there's this whole focus on goals, right? You know, you just talked about it, touched upon it. Some of the key milestones in a person's journey, right? Now, in your personal journey, you know, what are some of the key milestones that have come across? It could be house, car, materialistic stuff, spiritual. Like, you know, it's like unlocking a new level, right?
It's taken me a decade in this business to understand that money doesn't drive me, number one. It's taken me a decade to realize that if you truly want to create advice or create impact, it's not as challenging as people believe. I'm of the firm belief that if you truly want something, and that's for all of us here, right? If you truly, truly want something and you start visualizing it, I believe this world comes together for you. The people you meet start changing. How you think starts changing. Your body language changes. The people who come into your life, you would have never dreamt of or even thought that you would meet.
Some of the people who've come into your life, right? Like Robin Uthappa, for example. You know, I believe that was a turning point. You know, into starting that journey with a lot of athletes who are today, like, you know, doing really well in their careers, right? So talk to us about how that happened. What was that journey like?
Robin knows this as much as everybody else will today. He is a big part or an anchor in all of this. The journey that we've been through for the last 12 years is high, is low, is tough, but I see him today living his life, wife, 2 kids, happy, the healthiest he's ever been, the happiest he's ever been. Um, that gives me confidence that I'm on the right path. And like I said earlier, when you're doing things right, this universe just puts people together. You brought up a few names. Um, there's one who could have the best life in the world, and they choose to build schools and colleges and hospitals. You have one person who has money, fame, and everything, and he takes care of every assistant's children at wherever they train or play or etc. Right? That's the kind of people you meet when you want to do good work. And that's what I am seeing if I see the last 10, 12 years, because this gentleman introduced me to his coach in Bombay. And that gentleman happened to be very senior in Mumbai. He happened to be a coach of a few teams, and that opened up doors. Took 3 years, but opened up a lot of doors after that, because the intent was to create a ecosystem for them, not a money solution for them, because money solutions are short term,
Mm.
right? And that's what we looked to build in 2011. It took a few years to kind of put
Yeah.
that together, but I believe we're on that journey.
Got it. Tell us some of the unique challenges that you face when you manage pretty much a holistic way of looking at finances for athletes and some of the top performers in the world.
Before I come to
Yeah.
that, let's understand these athletes, professional
Hmm.
athletes, right? We have to understand that they are 0.1% of this world. 0.1%. Unfortunately or fortunately, this 0.1%, 99% of them come from a certain background, right? Maybe that's what builds fire. Maybe that's what breeds hunger. I don't know, and I don't want to be biased about it. But the numbers don't lie, right? So if you look at it from that perspective, it's a very small number. And if we look at the background and the education, we have to understand from their perspective. They are lost from that perspective. Number one, what do they know about investments? What does the family understand about investments, about taxation? You come into large sums of money. What do you do? Right? How much is going to go in tax?
Yeah.
How much do I need? Because an athlete only has 7 years, right? We have 25 to 35 years to earn. But how many
It's very
cricketers
rare.
or
Yeah.
athletes do you know for 20 years?
Yeah. Like you
It's
said, it's
very,
7 years.
very,
Yeah.
very small. In 7 years, that athlete needs to save money for himself, for his wife, for his kids, for his parents, for his siblings, for his neighbors, for his friends, for his managers. In 7 years. And they need to retire for a whole of 50 years. You and I have to save money only for 20.
Yeah.
This is a thought process that 99% of families and athletes do not comprehend, right? And that to me is one of the biggest challenges.
Yeah. Do you come across instances of got some money, need to blow it up now, right? Like, how do you counsel them, in these instances, right? Because like you're young, you only have one life, you're doing well, you're practically a celebrity, everybody knows you. So there's a certain lifestyle upgrade that you want to do, right? How do you do it sustainably, like, without blowing a hole through like this whole rest of the 50 years that you have to plan for, right?
That discussion cannot happen after the money comes.
Interesting.
That discussion needs to happen probably 6 months, a year, or 2 years before that money actually comes in, right? And that is where I inform a lot of the individuals, families, coaches to create this ecosystem around them. This ecosystem is not just for money, because in athletics or in sport, you need a coach, you need a trainer, physio, dietitian, you need all of that just to make it. Then once you make it, you need to manage your money, you need a CA, you need an auditor, you need a family member, you need a manager, you need somebody to go out and get you deals. You never had any of these people in your life. Where are you going to find these 10 people all of a sudden one day? Right? So there is somebody that will have to come together, right, to create this ecosystem, because today people are only talking about scouting athletes and creating technology to scout. How many athletes do we know who have gone broke? How many athletes do we know who have lost money in real estate deals or friends' businesses?
Yeah, a lot. Yeah.
Right?
Yeah.
So if you want to create retirement, you want to create wealth, you have got to set up a process.
In your journey, what are the common pitfalls that you've observed, like, and what's your advice to, folks who are in this journey, right?
Have a team,
Hmm.
communicate early. I say this because you mentioned a big check comes in and we want to buy a watch, a car, a home. We
Yeah.
want to do that 25, 50 lakh holiday, right? Because it comes from a space of insecurity. It comes from a space of inaptness, right? And we all have that. We are all humans at the end of the day. Today, they have the means, so they do it. I'm sure tomorrow, if you and I had it, we would have also done it. And we are humans. In our brain, we will always make up a reason. We
Yeah.
are amazing at making up reasons, right?
Yeah.
So from that perspective, I think talking to them about the basics, right? If we have a short career, what are some things we need to plan for it? If we have a long retirement where inflation is going to kill us in the long run, right? How do we manage that?
Yeah.
If we are looking at investments like we are looking to be an athlete, how can we delay that gratification for 3 to 5 to 7 to 10 years? Because when you delay, you know you will get there, right? But when you do get there, you will have assets, you will have time, and most importantly, you will have peace. And when you have these three, I tell these individuals and their families that the other challenge that they have that we need to work on is how they reinvent themselves after 7 to 10 years.
Very
You
important.
and I only need to upskill ourselves.
Yeah.
But there are athletes I know who will learn a language of Hindi to get a job.
Yeah.
There are athletes I know who will go for coaching, right? Voice modulation classes.
Yeah.
I know athletes who go and do MBAs, right? Roger Federer said this just day before yesterday at the Dartmouth. He said, I haven't retired. I have just graduated. And like all of you, I am also looking at what to do in this next part of my life,
Wow. Yeah.
right?
Yeah.
And being a tennis player, that hit home.
Can we just double click on inflation a little bit and explain how it eats into your money? Of course, there's an average person's life which 5-6%, is not 100 rupees not worth that much anymore next year. How is it specially problematic for athletes?
Simple math.
Yeah.
If I want to retire with 2 lakhs a month, right? My requirement will double every 10 years. So if I require 2 lakhs a month, that's 24 lakhs a year. In 10 years, I will require 4 lakhs and 48 lakhs. In 30 years, I will require 6 lakhs. That's 72 lakhs a year, right? And that is what I mentioned earlier, only 25 years of retirement.
Yeah.
An athlete
Yeah.
has to retire for 45 to 50 years.
Wow.
So imagine the corpus required. They will go from 2 to 4 to 8 to 16 lakhs a year. That is their requirement, and that is what inflation is. It's the value of your money coming down every year. You can buy less every year. Your spending power comes down every year.
Yeah.
Now, for 50 years of retirement or 40 years of retirement, what do they do?
What are some of the broad frameworks to hedge against inflation?
Money to us for families and specifically athletes are broken into three portions: wealth protection, wealth creation, wealth management. In wealth protection, we look at insurances, term insurance, health insurance, NPS, PPF, PFs, because we need to build security for them. Then you build liquidity for their requirements because they may get injured tomorrow.
When you spoke about insurance, I just remembered this instance from back in the day. I heard Muthiah Muralidharan used to insure his finger. It's that important.
Absolutely. Insurances are of two kinds. One is what you mentioned about Muralidharan, Cristiano Ronaldo,
Shane Warne.
Messi, Shane Warne.
Yeah.
I believe there are a few Indian cricketers as well who have done this, and rightly so, because they will have that only for 7 years. We have it for a lot longer that we can earn. So that's important from that perspective. Number one. Number two, as an athlete, we're injured. Where does the money go post retirement? Health.
Yeah.
Have you heard of families who sell homes and land because of it? Not their own home, but that excess home.
Yeah.
Why?
Yeah, and it can be sudden, right? Like, something happens, you have no choice but to spend, and it's expensive.
Life is sudden.
Yeah.
God is not going to tell us.
Yeah.
Right? And if we believe that God is going to prepare us, we're in for a whole different exercise. Right? And hence, we tell families what you have today, first protect that. Forget about creating wealth. Wealth creation comes after protecting what you already have. Why do families for marriages sell assets at a discount, sell real estate at a discount? When they get old and they retire, they sell at a discount. Why? When health goes bad. All of this can be avoided, right? If we just have a process in place, you create your liquidity, you create your contingency, you create your risk protection and your retirement. Once you have these, then even if there is market volatility, even if a deal goes bad, because markets are not perfect, no deal is going to give us 100% returns every time, right?
Yeah.
Um, create that structure. You will, if nothing else, you'll sleep peacefully at night.
Yeah.
You will be able to train with a clear mind, and your mind space will be on your sport and not what has gone wrong in your life,
Correct.
financially or otherwise.
Correct. We're discussing key strategies that are important for athletes and people who have sudden and short but very high profile careers. And we talked about wealth protection and then wealth creation, and then are we talking about legacy as well, or is it?
2 points here.
Yeah.
One, if we don't speak of legacy planning, first question is, how many athletes or families do you know who are fighting in court over property,
Yeah.
money?
Huge.
Huge.
Yeah.
Number one. Number two, we are going from a developing to a developed nation. Our taxation will increase, estate tax or gift tax may come in, and there was also some discussion about wealth tax.
Yeah.
Right? It's very important. Writing a will is very, very important. And making sure that your estates are planned in the right manner, whatever it may be, 2 bank accounts, 1 insurance, few FDs, few mutual funds, few stocks, 1 apartment, 1 land, whatever it may be. 4 out of 5 cases or 4 out of 7 cases in Karnataka, I believe, High Court,
Yeah.
are family dispute over money,
Wow.
property, gold, accounts,
Yeah.
or some asset.
And it takes years. Like.
I'm not worried about the fact that it takes years. My bigger problem here is cousins lose touch with cousins. Forget about
Yeah.
the parents not speaking to their siblings anymore.
Yeah.
You lose cousins in the process. Your children lose cousins in the process. That
Yeah.
is where insecurity is built. That is where anxiety builds, and that is where this economy sells you products to feed that anxiety, to feed that feeling of I am not adequate enough, so I need something else.
Yeah.
Right?
Yeah.
Why did back in the day in a joint family, why did every child grow up more holistic?
I was talking to Saurav Mukherjee, of Marcellus Fund. He has this theory that you have infrastructure coming in from one side, roads are being built, and all of that. So a lot of consolidation of small businesses into larger, businesses. So that's one big growth opportunity. And then you have technology coming in, and with Aadhaar, mobile phones, bank accounts, all of that. So there's a huge economic shift that is being driven. Better taxation, easier ways of sort of widening tax base, all of that, right? So infrastructure investment. So big brands going to be created in the next 4, 5, 10 years, right? Like, so interesting time to be in India as well.
Beautiful time to be in India. Genuinely one of the best decades that you and I will probably see together.
Yeah.
You spoke about Saurabh Mukherjee.
Yeah.
Brilliant.
Yeah.
His clarity of thought, his will to follow his belief.
Yeah.
Right? Good, bad, or ugly is irrelevant.
Yeah. Similar,
but to
right?
follow
Like,
your
yeah.
belief.
Yeah.
There are not too many people in today's world
Yeah.
who have that spine to do that. So for that, I have a lot of respect for him. Speaking of India's growth story, UPI?
Yeah.
We sell it to countries, right?
It's huge.
Now UPI is pure tech. We used to be a BPO country. We are leading a product today globally.
Yeah.
It happens to be in financial services, right? We happen to be a country of how many billion? 1.7 now?
1.4.
1.4. Yeah. Sorry. 1.4 billion. We need retail, we need clothes, we need food.
Yeah.
Which will happen to bring in a little bit of logistics.
Yeah.
For logistics, you need ports.
Yeah.
From the port to come to you, you need infrastructure. You have Gadkari at the helm creating magic.
Yeah.
Yeah. I don't know what to say. I think I believe what he's saying about India as well.
And short-term volatility aside, in the equities market during the election season, I think last week we had a dip and then suddenly it all kind of evened out. So for people who take a long-term view, it seems like a good place to participate in this India growth story. have a decent exposure to equity, and a bunch of other financial products. What's your sort of take on the asset basket itself, right? Like you have real estate, you have equities, mutual funds, and a whole lot of things, right? Gold, crypto, and all of that. So give us a sense of what's your approach and view of this, space.
Confusing, but I'll break it into two. I'll try and break it into
Yeah,
two
yeah,
again
yeah,
because I
yeah,
keep going back,
yeah,
right?
yeah.
One is creating baskets should be need based,
Mm-hmm.
not what my friends, family, neighbors, uncle, aunts, or business managers tell me.
Yeah.
And definitely not what my banker is telling me to meet the monthly target,
Yeah, yeah,
right?
yeah.
And that can only happen if you equip yourself either with education or with a team,
Mm-hmm.
right? Once you have that in place, you will build processes for your needs, your wants, your family, and your flash, that I call it,
Mm-hmm.
because all of them require certain flash.
Yeah.
Insecurity, flash.
Yep.
I have it myself,
Yeah.
not just everybody does,
Yeah. Yeah.
right?
Yeah.
So that's one part of it. And if you look at advisors in the long term, or who are not traders or FNOs or anything like that, right? Long term investors, what do? Equity, debt, gold,
Yeah.
commodities, real estate. That's 99% of the assets.
Yeah.
Have they gotten into day trading? Have they gotten into FNOs? They say that if I had so much time, I would upskill myself and go back to where I'm working, because the ROI I will get
Yeah.
there will be
Yeah.
way higher than
Yeah.
what this
Yeah.
market will give you.
Yeah.
This market is a passive way to make long-term money,
Mm.
right?
Mm.
If you have the time, the technology, the resources, the emotion, the aptitude to not listen to all of the noise, if you can do all of that, man, go ahead, right?
Yeah.
And if you can track it, if you can plan the taxation for it, and everybody thinks they can time the market,
Yeah.
right?
Yeah.
Timing the market has not made anybody money in the long term,
Yeah.
right?
Yeah.
Only your asset basket will bring that to you. So when
Mm.
you have these baskets in place, I tell them, why do you invest in a stock? Why do you invest in a mutual fund?
Mm.
Look at the top 50 companies in India, invest in the index.
Yeah.
You think index will grow?
Yeah.
I believe Indian index will grow, because this question started about how do we convince them about what is happening in India.
Yeah.
I am not going to convince a single family.
Mm.
All I'm going to tell them is, in from 1991 till today, or from 2000 till today, we have had 5 crashes:
Mm.
92, 2000, 2009, 2012, 2020,
Yeah.
right? Where we had crashes of more than 30, 40%.
Mm.
Did that happen every year? No. Did that happen at least once a decade? Absolutely. Now,
Mm.
in that decade, in the 90s, it was the Gulf War.
Yeah.
In the 2000s, it was Tech. In 3000, it was Lemonn. In the 2000s, it became Lemonn. Then it became something else. The reasons will change.
Yeah.
But has it grown from then till now? Even then, Indian markets, they say, with corruption, with pollution, with
Yeah.
population, with no growth, with no infra, we grew at 12%.
Yeah.
So,
Yeah.
and if we think our infra is getting better, if we think our middle class is opening up and spending more, if we think luxury brands in India are selling more, just put the two and two together. Look at
Mm.
the malls you walk into, look at the airport you walk into.
Yeah.
There are no seats available in an airport. You don't get hotel
Yeah.
bookings in India, right?
Yeah.
What are
Yeah.
we talking
Yeah.
about?
Yeah. Yeah.
Right?
Yeah. Yeah.
Just look around you. And I tell families here, look in your house. What is the atta you're buying?
Mm.
Right?
Mm.
What's the soap toothbrush that you're using?
Mm.
Which are the companies that are building this? You mentioned
Yeah.
infra.
Yeah.
There are companies required for cement. There are companies required for steel. There are companies required, right?
Paint.
I don't need to analyze balance sheet for 200 hours,
Yeah.
right? And there are certain analysts who are really, really good at it, right?
Mm.
If you think you're that good, do it.
Yeah.
If not, have a little bit of faith.
Okay, I'm going to ask you two questions, very simple ones. One is, this is interesting because when you have a lot at stake, you're making money. How do you build trust? Like, as in not you, but me as a potential buyer of financial services or planning and all of those kind of services, right? How do I find someone who I can trust? Like, what are the key questions, or objectively, how would I understand, like, does this guy know what he's talking about?
That's a great question. The first thing I would look at is that person compliant? In India, financial markets are governed by SEBI, and there are advisors who are also governed by SEBI. We can check on the SEBI website who these advisors are, because all of them are listed on there. That's the first. Are they compliant? Number two, what is their education? What is their experience levels? Right? Because that says something about past history, gives you a little bit at least. Then I would possibly look at the team and their target market. Because if I am someone as an individual, I want to know if their team is used to my kind of people as well. Because that person is not going to speak to me every time, transact with me every time, get on every call with me. So does the team know what people like me need?
Correct.
Right? That's another thing to understand with an advisor. And last but not least, I always ask them to ask, what is your revenue model? Are you going to take commissions from all the products that you sell to me? Right? Or are you going to charge me a fee? It could be a fixed fee. It could be based on the assets that you manage. Right? I believe that transparency of earning between an advisor and an investor is also one of the reasons why trust is built. There is never an iota of doubt that is this financial product, is this business investment, is this real estate deal right for me or right for Deeraj?
Very interesting. Yeah, because in mutual funds you see that a lot, right? Like, you have folks who get a commission from the fund houses, and then you have independent advisors. Like, both seem to thrive, but I'm not sure which is better for me, right?
This business is here to thrive. Less than 5% of India is managed today by professionals. So whichever way you go, this business is going to grow. Look at the tech platforms we have, look at the DIY platforms we have, and it's not even 7% of our population, guys. Right? There's a long way to go. So in terms of the business I am in or the industry that I'm in, I'm very grateful to be here. My challenge is not the people selling. My challenge is the corporate structure they're a part of, the revenue model that is planned, how the businesses make money, and how the stock prices go up. Right? If that can be switched to, in our office, we call it the Tata model. Right? What do you need to create as the Tata model to build an ecosystem for individuals, for families, for athletes? Because at the end of the day, it is money. This middle class works very hard for this money. Right? Which other brand can you think of who would possibly do it the right way for a decade or more? Right? So that's what we call it in our office. Yeah.
Okay. How much should I pay an advisor?
If an advisor charges a family 5,000, how many families does he need to manage to earn 5 lakhs a month?
A lot.
Right? If he or she is managing that many families or individuals, how much support can they provide? If all they are earning from you is 5,000, do you truly believe every financial decision will be in your best interest? Possibly not. Right? So it's money. Money is peace of mind. Money is parents, spouse, children, in-laws, people on your team. If you're a part of like charities, or my family's always been, your income has to go outside the house. Right? My mom used to teach a school of differently abled. My dad's been a part of an orphanage and a visually impaired school in Bangalore, here in JP Nagar, for more than 3 decades. His cousin's been doing this. His cousin, a legend, absolute legend. So that's what we've seen. And that's the ecosystem we want to build for retirement, for athletes, because you require wealth, you require health, but you also require peace of mind.
When someone comes to you for say I'm buying land here, you're my sort of nephew, why don't you invest with me? या फिर hey, ये stock में पैसा डाल दे, double हो गया, अब तुम भी charge. How do you say no to them? Like, just like outright say no?
It's taken more than 5 years or close to a decade for a bunch of these athletes now, because we work with a few of them
Yeah.
now. It's taken 5 years plus for
Yeah.
them to call and say, should I do this now or not? And if the answer from us is no, then their background is speak to Deeraj. If he says, okay, we'll go
Yeah,
ahead.
yeah, yeah,
Right?
yeah,
It's amazing as a feeling,
yeah.
but it's a huge responsibility. It's a huge
Yeah.
responsibility. With trust comes responsibility, right? So there's a very fine line and there's a balance. So I don't mind being that bad person because my intent is very clear. You buy land, you buy stocks, you buy US equity, you buy in Singapore, you buy in Gift City in Gujarat, you buy in ECR in Chennai. My income is the same,
Yeah.
right? My income is exactly the same. So if that is the case, why would I speak to you in any other way?
So this is a bit of a rapid fire kind of a thing. So let's keep it short. Um, Rent an apartment or buy a house?
Rent an apartment and reinvest the rest of the EMI.
Perfect. Side hustle or focus on the current job?
I like multiple sources of income, and during my retirement, I tell families to have multiple sources of income because you never know what's going to happen. Always expect the unexpected.
Invest in mutual funds or save in fixed deposits or become a trader?
Ooh. None of the above. Index funds.
Uh,
Nifty 50, Next 50, mid cap, small cap, gold, silver. Keep it simple, please.
Pay off education loans early or invest in a PPF?
Debt, home loan, education loan can help you create long term wealth. Please keep it and reinvest that money. If you want a PPF, it will still do well. If not, just go with the index and bet on India. Don't bet on a company, don't bet on a fund, don't bet on a fund manager. Index.
Spend money on skill development courses or save on higher education abroad?
Skill development. Any freaking day we have education all over the place. India, 1 out of 2 global companies today are run by, can I be biased and say South Indians? Karnataka, Tamil Nadu, Hyderabad. They're ruling, not them, right? They are ruling most corporates in the US. Now, if that brain drain of 70s, 80s, 90s, 2000s remains even 5% in India for the next 2 decades, poof, India can be very scary.
Okay, tricky question. Real estate in Dubai or Goa?
Dubai. Goa market is very dicey. The people coming in there are predominantly Indians or people with a lot of different kind of money. Dubai, what's happened, desperate families in the 70s and 80s. Then it became the educated white skins in the 90s. Then it became war-torn countries in the 2010s, 20s. So what has happened is people with money have come there to build a home. People with money have come there to build a life. People are not just building vacation homes. They're not just going there for 1 month a year, right? These people are building livelihoods here. And it's easier to come to Mangalore, where I'm from, or to Bangalore or to Hyderabad than to go to Delhi, possibly, right? Middle East is going to be global. Maybe I'm a little biased here because I grew up there.
Yeah.
But we grew up with the European tour holiday. I believe my kids will grow up with a Middle Eastern tour holiday and a
So-
Asia Pacific tour holiday.
Some people would say it's a bubble, the Dubai real estate bit.
Absolutely. I heard this, or we heard this as a family when my parents were there in the 90s. Um, when Dubai exploded in the 2000s. When the 2009 crisis happened, they said Dubai is finished or the Middle East is done. Then late 2000s, they said Saudi is too closed and there is going to be no future, and all of a sudden Doha popped up, and then we had a World Cup, and now Saudi is buying the PGA Tour. India is talking about having the IPL in the Middle East. You have the tallest structure in the world. You have 168 nationalities coming to Dubai. You have money from different countries. Is it a bubble? Will it grow at 30, 40, 50%? Absolutely not. But real estate will grow at 7 to 8 to 9%.
Yeah.
It will give you that. But Goa is cash money, maybe. This
So
is
it's more
hard
of
on
a risk
Indians.
kind of.
I want peace of mind.
Yeah.
I don't want someone when I'm on a vacation, I don't want my next door neighbor blasting different language music, or people from different parts of India coming for their raves and for their parties.
Yeah.
I want peace of mind. I want my children to be safe. I want my wife to be able to walk on the road at 3 o'clock at night.
Yeah.
Tell me where I'll get that.
Okay.
A concrete bubble which may not fall.
Nice one. Wine as an investment. मतलब पीने के लिए नहीं.
So there are multiple asset classes today,
Yeah.
right? And when you think of wealth protection, wealth creation, wealth management, and you create these asset classes, there is generally for a family 5 to 7.5% of their overall portfolio, which could be in alternate assets. Now here what happens, all of your goals are covered, liquidity is covered, worst case scenario is covered. Here you can try blockchain technology because the world is moving towards tokenization. We are tokenizing
Yeah.
our land. We
Yeah.
tokenized our Aadhaar. We are tokenizing it through UPIs. So let's not be naive to what's happening, right? Tokenization is a part of the future. So if I want to put some money into that kind of asset class, I should have 5 to 7.5% in to look at different asset classes. People may call this different names, but I won't lose sleep. My children won't lose the house. Their education will be taken care of. It doesn't impact life. If it does well, amazing, right? We will give an experience. We can donate more. We can travel more. Do all of that, right? But if not, it doesn't impact your family.
Got it. Last one, art, and I guess it's the same category. So
As an asset class, art, uh, blockchain technology, alcohol, wine, are all assets that could be looked at in proportion to your overall asset allocation. Absolutely.
awesome. That was it. Thank you so much, Deeraj, for being on the show. It's been a long one, but hopefully our audience will find it interesting enough to watch throughout the episode. Lovely to have you here, Deeraj.
Thank you so much for the opportunity. Thank you so much for inviting me here today.
Lemonn, your investment partner.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.